Developments signal severe turbulence. 4 jets struggle for survival.
Etihad has even conveyed to the lenders that if it comes to that, it is even okay to exit Jet Airways.
If it doesn't happen in the next few days, I think the government will have to take a call to buy out Etihad, run it for some time till they find a suitable investor.
Extremely negative for the lenders. First finding a buyer, and if they don't succeed, then going to NCLT will mean much more than just 8,500 crores.
Pilots have taken a collective call that from 1st of April onwards, without salary, they would not be flying aeroplanes.
Airline is flying just 41 planes, or around 34% of its fleet, at 140 flights a day, a sharp reduction from what used to be around 600 flights earlier.
Well, this is a huge problem, especially for those who may be traveling back home for Holi, considering that, if you take one day off, you get a 4-day holiday. So I think it's hitting home. It's not a stock market problem. The stock market seems to know something we all don't know because the stock is not falling. But clearly for travelers, it's a very huge issue. But on that note, the color of this festival of colors is green. There are no two ways about it. You don't argue against liquidity. Another 2,132 crores coming in yesterday has taken just the March tally of the FII pump to 23,000 crores. So that's $3 billion. We should all have been having green dupattas or green jackets maybe today. It's just a gush, and against it you can throw any argument. Yeah, crude went up to 68 yesterday. Yes, the rupee has fallen to 69, and the bond yields have gone back another 5 basis points. You can go on auto, slow down, people have cut. You can argue anything, but you don't argue against the color of the money and the color of the screen.
Okay, well, Lata, hi, good morning, Anuj, morning. Happy Holi, first of all, right, to all our viewers and to the both of you. I mean, it's such a special festival, the onset of spring, and there's so much food that gets cooked, especially in my house. I mean, there's aloo puri, halwa, chana, so I look forward to that. But yes, I mean, there's lots happening in the market as well. Anuj, morning, big money coming in from the FI fraternity and big outperformance from the MSCI India Index. You think it's going to be a great start to the season?
Morning, Sonia. Yes, indeed. First of all, happy Holi. Today is, of course, Holika Dahan, the Choti Holi as they call it, and tonight I'm looking forward to the festivities of actual Holika Dahan.
You look like you will fit either a Holi festival or you will fit the election rally.
Yeah, but you know what? The Holi festivities have been a part of our childhood. I mean, I grew up in Allahabad. Nobody plays Holi like they play in Allahabad. Okay. I can tell you that, and it's phenomenal. So Holika Dahan today, and of course tomorrow, all the pichkaris and rang and all. But anyway, look, this is a market in which you hear everyone, take the opinion
what the screen
and
says.
Throw it. And just like we discussed yesterday, what happened? The market, it again rallied. And what's happening in this market is, the momentum is so strong that all intraday dips are being bought within minutes. And me and Subhi were doing closing bell yesterday. When we started the show, the Nifty futures fell from 11,560 to 11,520, from 240 to 245. It was a 50-point dip in the Nifty futures. In next 10 minutes, not only that was entirely gobbled, but there was more. It actually, the last quote on Nifty futures was the highest point of the day. Bank Nifty futures from 29,860 to 29,715. And people started saying, look, the rally is getting over and all. Next 10 minutes, you're more than that. You're higher than that, and again, close at the highest point. But I think the one more interesting thing which happened yesterday, post 3 p.m., was this big buying in IT. Infosys had a big uptick post 3 p.m. and had very strong delivery numbers, almost about 400 crores in Infosys. So, once again, this is a market in which the FII favorites are just getting latched onto, and if these stocks are correcting, you have to buy them. My personal sense is that this is a market which, because of this fresh expansion, before election perhaps it could just burst out. It may not leave too much post-election. It could go to, for all perhaps even 13,000 on the Nifty before election itself. Of course, in between you will need some correction, some consolidation. Yesterday's rally was broad-based. The mid-caps also managed to catch up with large caps. That's a good thing. There's a weekly options expiry today though, and tomorrow is off. So let's see. The Fed outcome normally is positive for the market. I think the best way to play this market is to just stay on the sideline and take positions for Friday. especially if in the 3 p.m. move the market is brought down because of some stocks, that will give you a great entry point for Friday and for next week's weekly options expiry.
Why would it want to come down at all?
Because
only for expiry?
Because what happens is, the smart money which has been buying, and on these days they want to eat premium. There are a lot of people chasing options on a day like today. It looks very cute to, or very tempting to buy 11,550 call or 11,600 call, because the premiums are down to 9 rupees, 10 rupees. You're thinking that 9-10 rupees will become 50 or 60. But for those who sold at 10 rupees and they covered it at 1 rupee, they are actually making almost 900%. So that's the way to approach on the expiry days. If there's a 3 p.m. move, we'll find out. But normally on expiry days, the move happens one day before expiry. We have seen that. Normally, it's about consolidation on the expiry day.
Okay, well, the numbers have been coming in thick and fast. So if you look at the month of March, it's 23,000 crores of money that has come in from FIIs. This compares to about 13,000 crores in the month of February and about 128 crores in the month of January. So yes, it's purely an FII-driven rally that we're looking at right now in our markets. But Lata, we were discussing how this market has climbed every wall of worry, but we shouldn't take away from the fact that there are slowdown concerns.
Oh yes, there are slowdown concerns. And I added this only because it's just breaking news. Yesterday, a bunch of 15 economists met. This has not really got anything to do with the market. The monetary policy is on April 5th. The meeting happened yesterday, and, at least one of the economists who went with the crowd said it was what he called it, AKDMBP or something. I asked him what that means. He said, Allah ke naam pe de de baba. Was what it was. Like everyone saying there is a slowdown. Not everyone. Okay, a large number, a majority saying that there is a slowdown, there is liquidity tightness, and so the order of the day should be to cut rates and to keep the OMOs going. And of course, everyone welcomed the dollar-rupee swap as a new way in which the Reserve Bank, and it was timed to perfection, even as the dollars were gushing in. An announcement like that made a lot of sense. But there were about at least say 1/3 of the economists who warned that when the fisc is loosening, it's not a great idea to also have monetary loosening. We had seen it in 2011-12, the Subbarao Shubhir Gokaran combine, when we all worried about the global financial crisis, and there was both fiscal and monetary loosening, and then we had double-digit inflation for the next 5 years. So sometimes you may overstate the slowdown crisis and do too much. That warning was also on the table, but that was a minority. The majority of the economists were asking for a continuation of the OMOs and at least one more rate cut. There are some who argued there could be more because the slowdown is very much there.
Okay, in fact, we're going to discuss that. That's a big theme that we're going to take forward on our show today. In the auto space, there's a big production cut coming from the OEMs, from auto ancillary makers. So we'll take that theme forward. But it is Holi and there's a holiday tomorrow. So on that optimistic note, we're going to start the show and tell you what our wise experts have to say as we head into trade this morning. Hemant Sambatur of Deutsche Bank expects an improvement in liquidity in India leading up to the election results and also beyond the event. He says this is in line with a potential reduction in earnings uncertainty, setting the stage to go long in the Indian markets, a relative laggard in Asia this year. As highlighted in their previous report, Hemant says the Indian market on an average delivered 11% plus in the 3-month window prior to the election results in the past.
Okay. Well, money market views, and they are important because yesterday the rupee all of a sudden took a nosedive and went towards 69, as you will notice. At one point in time, it was 68.42. So here's some view on that. Pramit Brahmabhat of Veracity says that the technical correction in the rupee may continue to put it under pressure for a while. He expects the USD INR pair to trade in a range of 68.80, 69.20. Yesterday, the mood in the market yesterday was that people had gone way too long rupee and way too short dollar. So there was a bit of, there was a spate of correction, and Pramit's view is the correction will continue.
Okay, well, we also got a chance to get a view from Dhaval Dalal of Edelweiss. He says that government bonds gave up some of their gains yesterday amidst concerns that the RBI may use the forex route and less of OMOs to inject liquidity in the system. He believes it's premature to draw this conclusion and adds that macroeconomic landscape, prospects of FPI flows and change in sentiment are quite powerful indicators of the bullish sentiment in the medium term. He says the bond markets expect a 50 basis points rate cut in FY20 along with a supportive RBI, and that should help helped the 10-year benchmark bond yield to trend towards the 7.2 to 7.25% in the medium term.
Well, I just want to add a word over here. Yesterday there was one of the news agencies, I think Reuters, I'm not sure, one of the news agencies which quoted a North Block official saying that because this dollar-rupee swap has been so welcomed, they will do many more of it. So the market concluded then RBI will not be buying bonds, and that's where you saw the bond yield spike and the bond prices fall. Later on in the evening, we had an occasion, the Reserve Bank Governor spoke at Dr. Y.V. Reddy's book launch, and there we pressed him to say whether this will be the regular mode of intervention, and he did not reply to it. So I think yesterday the bond market went overboard on that statement. I think they will use both judiciously. They will be buying bonds and they will do dollar swaps.
Okay, well, you know, and just one more point before we talk about the global cues. Between now and next 1.5 months, you'll hear a lot of noise. You know, whether it's the economists, whether it's the CA, whether it's the journalists, whether it's the actors, stand-up comedians, anyone. Look, all of us have some kind of political view, and a lot of this is going to be noise. So perhaps the best would be to just ignore the noise and focus on the screen. And
this one was not noise because it's a very.
I'm not talking about this. I'm saying in general.
Generally,
in general, because we saw that last time as well.
Posturing.
In general, you'll see a lot of posturing, a lot of noise, but most of that would be about political, so just perhaps best to ignore that. But anyway, let's talk about the global cues. That's very important. Here's Mangalam with the world view.
Well, the key headline from the World View is the fact that the Dow has snapped a 4-day winning streak. At one point yesterday, the Dow Jones was high by about 250 points, snapped that and ended well off highs, and that's primarily on account of some fresh news coming in with regards to uncertainty on the trade front. There was reports that suggested that China may be pushing back against the US demand, so that brought about some uncertainty, because of which the trading favorites or the trade war favorites like Caterpillar, Boeing as well as Apple, all of them came off highs. Boeing, of course, has its own set of problems. The another imponderable will be the outcome of the Fed meeting, which is currently underway. The street expects the Fed to lower the interest rate forecast, or the dot plot as we call it. However, while the US was at the high point of the day, the European markets shut, and which is why all of them were in the green, led higher specifically by the auto index. There were reports that Peugeot will buy Fiat Chrysler, or they favor Fiat Chrysler for a consolidation, which is why Fiat Chrysler was higher by 1%, and it took all the other companies as well, the likes of Porsche, Daimler, higher in yesterday's trading session. The key imponderable in the European region will be Brexit. There is further uncertainty. People believe that May's request for extension of the Brexit will not be accepted by the EU, and that's primarily because she hasn't yet found a deal or approval coming in from UK lawmakers for her version of the deal. The Asian markets, they're taking cues coming in from the Wall Street. Most of them are lower in trade, barring the Nikkei, which is mildly in the green as we speak. For us, the important factors will be the rupee as well as crude. Remember, the crude currently is closer to 67.5. Rupee has weakened, so it'll be important to see when the twain shall meet, because the last time in November, both of them met at 72.5. The SGX Nifty to the expiry day indicates a flattish opening with a mild red tick if you must.
Well, if you want to know the time, Mangalam, there's a Morgan Stanley report which says that crude will be $75 in the third quarter of the calendar.
Okay, well, we'll keep an eye on that. But for now, it hit that 4-month high of 68.2 yesterday. So, that continues to be a bit of a niggling worry for markets like ours. Thanks, Mangalam, for that.